Hey all, Al Dominick, unabashed fan of fintech, checking in from Cornerstone Advisors' makeshift studio in Washington, D.C. for 2 days fintech hustle, where I got to tell you, I feel like the opening act for the band about to take the stage. You know, since Kara Parkey at MX inspired my man Sam Kilmer to name this series by noting that, you know, the hustle just looks different now, I had to pull a Sam and bring both the guitar to the conversation along with a few stylish hats because, you know, this is not a coat and tie crowd that we're talking with. And if you know Sam, you know he's ready to rock both a sweet lid and some classic tunes. You know, Key and I were talking about going gonzo style as only Cornerstone Advisors can with two incredibly talented and connected guests, both fintech founders. In a moment, you're going to have a chance to see Kelli Schultz, the president of Allied Payment Network, whom you may also recognize as a co-founder and president of Venminder. She also, if you've been to any AFT events, carries that, you know, nice little lapel that says past president. With her is Peter Glyman, managing director at Jack Henry. But before that, he was a co-founder at Gizio, one of the more notable PFM companies around, especially when the fintech moniker really started to become a thing. Now, you know, I've been asked a bunch of times since I joined Cornerstone in April, what does gonzo banker, or even gonzo style mean? I just want to make sure you understand this is our cultural nod to Hunter Thompson, who, among other things, served as the political editor for Rolling Stones in the 60s and 70s. And when we got our start 20 years ago as a company, his style of journalism, which was focused, spirited, and opinionated, really resonated with our founding team and inspired the way we approach this incredible industry of ours. So, you know, we're going to poke the industry when it needs poking. We're going to take strong, informed stands. And we're going to do our absolute best to help people think a little bit differently. But we're going to do this all in line with providing wildly prescriptive, actionable advice that goes beyond cookie cutter. So before we get rolling, just a few simple housekeeping do's and don'ts. First one, do ask questions via the chat feature. But, you know, guys, if you don't know how to use the chat feature by now, we have some consultants at Cornerstone that are standing by and they're ready to bill you. Or maybe they'll help. The next one is don't worry about turning on your screen. Since we're doing the hustle, we need to pay attention to each other. And also we've disabled this feature on the platform that you're using today, so you're welcome on that count. Do visit Kelli and Pete's LinkedIn pages during this webinar and shoot them connection requests with the note if you aren't already connected with them. And of course, you can do the same for Sam and myself. Finally, don't worry about requesting a copy of this episode. This is being recorded as we speak. It will be available on demand immediately after this webinar ends. The same link that you use to log in is the one that you'll be able to use to pull down an archived version. Our AV team is going to put this up on the Cornerstone website. We're going to actively be posting and sharing this on Twitter and LinkedIn in the days and weeks to come. So we just ask that you give it a thumbs up if you like it. So those are the housekeeping details. Nothing too crazy here in DC. It's only November 8th, Election Day. We got some things to talk about, but we're going to keep it focused on the fintech hustle. Sam, I know you like to tell a good success story or two to get things rolling. Maybe you can help tee up our guests by relating something to both Kelli and then to Pete.
You bet. Would love to. And hello from the home office, or kind of remote outpost office here in Indianapolis, Indiana, from the heartland. Good to be with all of you, and great to see you again, Al. I guess we've been out on the road a little bit together, and that's been nice. And that's a nice looking guitar you got back there too. But we'll get to that later. I just wanted to first of all just an advanced shout out to Kelli and Peter for joining us. I've had mad respect for these two for the longest time. As I like to say, they live at that epicenter of the fintech Venn diagram that is, what is it? It's have fun, smart, and get shit done. I've always loved that combination of things, and they kind of, that's kind of always been our criteria. Whenever people come to us and say, "Hey, what's this fintech hustle thing, and who do you bring on?" I'm always like, that's sort of my 3-point plan of, are they fun, and do they keep it real? And Kelli and Peter have always more than embodied that, and so I'm grateful that they joined us, and I just love the founder spirit that they bring even to larger companies. I think Kelli and Peter, I think you guys would agree. You sort of, having myself not a founder, but at small startup companies, Inc. 500 and whatnot, you sort of never lose that. in your blood. Even no matter where you go, you have that same kind of frantic, somewhere between we're going to crush the world and are we going to make payroll sensibility that brings the urgency out there. So I'm glad you guys are with us. But I guess, one thing I would just, first of all, welcome to both of you. And I thought we would just kick off by, I don't know if people that have joined us on the Hustle before know what a day in your life is like. Like, maybe just to get started, could you tell us just a little bit about what you do and how you spend your day? And Kelli, my mom always taught me ladies first, so I'm going to go with my mom on that. So I'm just going to ask you, hey, what's a day in the life of Kelli Schultz look like these days?
Oh, are you sure that you want to know, Sam?
Oh yeah.
I think the fintech moniker kind of works really well, not only in the fintech side of my life, but in my life in general. And so, I'm a mom of three, one in the 20s, two teenagers at home today. Welcome from my home office in Hilltop in Elizabethtown, Kentucky, where I kind of do business in support of a Fort Wayne, Indiana-based company, Allied Payment Network. And so, a day in the life consists usually of a little bit of, thought and prayer in the morning, right? And kind of getting those kids off to school and hoping we're going to get through the day without, any bat phone calls, it's always a great day when there's not an emergency in an early stage company, particularly one that moves a lot of money. So we go through that, and then I'm really kind of guiding people that I'm building in the organization. And, my title changes all the time. I never have cared what my title is. I've always kind of been one of those, hey, call me the janitor if you want to, as long as my paycheck is right, I don't care. But what I really do enjoy is the hustle and really building great teams out of great people in great communities. That focus on delivering services to our community banking network here in the U.S., which I think is so unique and such a blessing for us. And I think we need to be really cautious in these days that we don't squeeze it out. So all my efforts are going into that. You'll find me building across the company from, everywhere from, sales and revenue and marketing and technology and business development, all the way out to the service experience and designing that. So that, I get to design how our clients feel when they interact with us. And that's kind of an honor to be able to do that. It's not easy to deliver on every day. And so then it becomes about all the processes and underpinnings. So all that said, Sam, I'm kind of bouncing around the business, helping grow whatever area needs the focus so that we can take our company today from, where we stand today to, another successful exit ultimately. And, so Pete, when you're ready for your next bill pay company, I'll be ready for you.
So what I think one of the things I'm hearing is no titles necessary, bouncing around. Mm-hmm. There's clearly a revenue component, but it's mainly team building. And I love the service delivery. And so again, welcome. And Peter, take us through, in addition to that colorful background, Peter, I love that's like vintage California, maybe a little bit, Peter. I don't know.
Yeah, it's awesome, Pete. Love that.
Yeah, little 70s, roller rink vibe going on.
Yeah. That makes me want to put my skates on.
There you go. I want to see that, Kelli.
You do. I used to be in skates a lot.
What's that, Sam?
What's your day in the life looking like there, Peter?
Oh, well, so this is actually the home office away from home. So it's actually a really neat spot. So when COVID happened, my wife and I were working out of the house and wanted to try to get out of the house. So we found some office space at a local marina, about 5 minutes walk from the house, and so we ended up renting it. And we did the paint on the back on the wall here and made it fun. And so she's got an office upstairs, I got an office downstairs, and it allows you to leave in the morning, leave the house, go get a cup of coffee, and come to work, which is nice to be able to have some space dedicated to it. So it's a great spot. But so outside of being here, as most of y'all know, I work for Jack Henry. Jack Henry acquired Geezeo back in 2019. I'd say my days are a little different than they used to be back during the Geezeo hustle, which was, living and breathing and dying every day, with new challenges. But really enjoying my role and the work that I'm doing at Jack Henry. I got to spend, the last couple of years on digital strategy, working with fintechs, saying yes to them to make it easy for them to integrate, which is a fun place to be, being, as opposed to being on the other side of it when things were a real challenge back in the day. So being in a position to help fintechs, reach our addressable market, that's been really enjoyable. And this last year I joined the corporate strategy team, and been focused on a lot, I'd say within the last year or so on Jack Henry's crypto strategy. So still quite a bit with fintechs, in general, but with an eye towards crypto. And then outside of work, spending some time flying planes, driving boats, and we've got a 10-month-old baby at the house, so that's keeping us really busy.
Well, that's an adult portion right there. I that's fantastic. And even amongst all that, didn't you tell me you were just at the Money 2020 show?
Yeah, just at Money 2020. Yeah, it was great. It was a great show, actually. I think, probably got 3 months worth of meetings in 2 days. So I'd say it was one of the better ones that I've been at in quite some time, without a over concentration of a particular area too. So it was a good event.
Yeah. Hey, Pete, let me hop in and ask you then, Sam, can we dive right into questions? I know we were kind of going to freeform on things, but
absolutely. Jump in.
So we have, Sam and I get to hang out with Ron Shevlin, who's our chief research officer. And Ron came in after a few days in Las Vegas looking like he needed a few corpse revivers and some oxygen tents to prop him up.
No doubt.
And that's the snark going to the snark, the king of snark. But, I've been really trying to absorb, because I wasn't able to go to Vegas this year, what some folks are talking about. I made note of something Chris Nichols at South State wrote, and it was all around big ideas and small ideas. And I want to paraphrase him. I think one of his big ideas was, people still don't have a fundamental understanding of profitability, and that a lot of vendors, banks, speakers have no real feel for profitability when it comes to products. So, you're talking about crypto. Crypto has gotten pretty cold over the last, 6 to 9 months. The underlying blockchain technology notwithstanding, you think of crypto and how much a bank might make off of customers in terms of to offset the risk of bringing it in. That number is probably pretty small. Do you think that big idea of knowing your profitability was something that was not discussed at Money 2020 in a way that it could have been? And that's to you, Pete. So I'm going to try to stump you right out of the gate.
Sure. I think that's certainly, we see that with almost, any new innovation. That's always the pushback and challenge of, profitability and revenue, outside of customer adoption, obviously, notwithstanding. But if you take it back to specifically to crypto, I think, to your point, it's really the underlying technology, blockchain technology, that is the real opportunity here for, financial services, as it relates to payments and a variety of other applications. But, and if you look at it as it relates to profitability, if you look at it as it relates to operational efficiencies or improving or reducing costs and improving margins on services, I would say crypto related to blockchain and payments is hotter than ever, and isn't cold by any means. Certainly as an asset class, as an investment vehicle, the crypto winter is a real thing. But you could say the same thing about the U.S. securities market. But I think as we look at applications in financial services, profitability should be a guiding light, in my opinion, and the opportunities to reduce costs and create new and improved solutions that support the consumer's demands, a lot of those opportunities are right in front of us.
Yeah. I mean, I think of crypto as
I could add something to that.
Oh, yeah.
So, I tend to agree with Pete in that, crypto's a strange thing. Just when you think it's cold, it's not. And vice versa. It's very volatile is what it is. And, that said, everyone doesn't have an appetite for that. However, what I think is important for community banks right now, as we think about profitability, is to talk about a bigger picture than what is crypto. And the bigger picture is, as a community bank, I need to attract younger generations who think that I am irrelevant today. So macro level profitability is gain the customer that you're not going to get otherwise, and figure out how you're going to show them that you're not only relevant as a community bank, you're not their grandfather's bank, but that you have capabilities that you can deliver to that user in a way that they can't get anywhere else, and they get a relationship too. And so when they do grow up and they do face that life challenge, then at that point, they're going to know who to call. And I think the profitability comes with earning the relationship, but there's also tremendous commissions to be earned on crypto trading by banks. And so from a non-interest income perspective, this is one of the first products in quite some time that's come out that's allowed a bank to actually earn commission on the trading. And so I think that's a big deal for them.
Yeah. I mean, Pete and I were nerding out about tokenization and other concepts at AFT out in California. He introduced me to the NTT concept. You got the non-fungible tokens and then the non-transferable ones. I guess I try not to be too advanced in my thinking for something that's still developing. But where I get excited about crypto is not about it being an asset class, but more of a proof of concept. So if I can look at a digital asset moving on the blockchain, it shows it can be done. So that's where I get more bullish on the underlying technology, because then you can start to think about the business outcomes that can be achieved. You can think about how do you create the plumbing that's needed for the future. And that's where I look at banks needing to really, get a little bit more sophisticated even before there's regulatory clarity. So I'm not trying to dismiss the tokens and the crypto, itself. I guess I just am thinking as a bank who's typically been skeptical about the business results that they could find, that if you could look at it as just something that proves that it works, your mind might, reorient itself. I don't know, Sam.
I was talking to a colleague at work, and the question came up: how many of our customers want this? How many of our customers are asking for crypto-related solutions? And my answer is actually not many of them. Some of them are looking to be innovative. Kelly, to your point, to stay relevant, to offer new products and services that demonstrate innovation and uniqueness in the market. But I can tell you, all of our customers want to offer products that reduce their costs, improve quality. So if you take the crypto and blockchain, language out of the solution, you don't have to educate a market on here's a lower cost payment solution that is faster and also introduces some really neat components around order management. And there's your smart contract, right? So I think that's where some of the challenge would be stripping out some of the nomenclature to introduce products and services that ultimately, back to your profitability point, I think is a really
well. I think the other thing that Kelly, I think you nailed. You talked about capabilities that make you relevant, and Pete, to your point around this notion of how many. I always sort of it's kind of like going to conferences, in fintech. Is it always important that there be a bazillion people there, or is it important that the right 100 people are there? I think similarly. I'm thinking specifically about of the mid-sized banks in the United States, 70% of them are commercial banks. And as more of those commercial banks are adding wealth management, look at Treasury, look no further. There's almost a parallel there because, it's like Kelly, to your point, you earn fee income from Treasury. at the same time that you've got pressure on your consumer interchange because of legislation and all kinds of things happening. So you've got pressure on your your non-interest income on the consumer side at the same time that you may very well be predominantly a commercial bank. You're trying to add treasury to be more competitive. How many people use treasury? How many businesses use treasury to bank it? For most mid-sized banks, it's not that many, but the point is it's the right few that you're locking up so much of the relevance and earnings potential and earnings, future earnings risk or whatever. And so anyway, I think that was a good point, Kelly, around kind of a capability to stay relevant. And I think, Pete, to your point, it may not be that it's that many, but what I guess one of the things I would ask you guys, and maybe certainly I'm seeing a lot more of it, is just people talking about their niches and where they really want to be good. And it could be that crypto may not be, but for some of these banks, it's an important must-have for a group of, it may be 15 or 150 clients, and that's it. I don't know if you guys have any thoughts on that, but it strikes me that it may not be about having a whole bunch.
Well, it's not necessarily. I think every community bank and credit union needs to shape who they are, why they exist, and who they're here to serve. And when you think about who am I here to serve, then that market has certain characteristics or qualities, in the niche that you want to attract, right? And so if you're, agriculture, you'd be amazed at how much P2P takes off in the ag business, because we're constantly just transacting with individuals throughout the day, and it's a really easy way to transfer money. So there are ways like that becomes a niche product. I've got one in Dakota that, that's absolutely the case. They have one of the highest adoption rates on a P2P product anywhere in the States, but it's because of that clientele that they have. They're more modern, progressive farmers, right? So, even with crypto, I don't know if crypto is going to be the it, right? I mean, none of us know that. But what I can tell you is we have to do something. We can't just rest on our laurels and be the bank of 1980. We have to be current. We have to be bringing forward products and reasons to engage. Pete and I could probably go all day on engagement, anything, banking, anything along those lines. But they really have to have something that makes those consumers feel like this is the place for me. It's got the right mix of products. This is who I am. This is someone that I can count on to take care of me. And whether that is with crypto or something else, I don't know. But I do know one thing. The marketing power alone for communities and credit unions is sending a message that, hey, something's happening here. We're different. We're thinking differently than we used to. And done right, that can attract new generations to bank with them that may not have given them a look otherwise. Truth is, consumers today choose their bank on technology. And at the end of the day, it doesn't matter what your interest rate is, and it doesn't matter where the grandfather banked. In fact, that almost precludes that they won't bank there. So at the end of the day, it really is a question of how do you position yourself to be, just right for that market segment that you're there to serve. You don't need to take over the world to do that.
Hey, Sam, can I add and build on what Kelly just said real quick?
Sure. Mm-hmm.
So, you talk about going to a cocktail party and, creating a little bit of a conversation starter. Sam and I do this, all the time. So Sam has his hats. That's why I brought my hats in case I need to toss one on. But, you start to talk about things, right? Anyone who's seen Sam at an event loves his hats. He's really stylish. I think fintechs can be stylish to banks that they're trying to do business with, not as a hard sales pitch, but to understand if you're talking about blockchain today, from a bank board's standpoint, there has to be a fiduciary duty to follow this and to interject it into their strategic conversations. Because if you're at the board level, you cannot be a fast follower on some of these conversations. They have a responsibility to look at this. Just because the business logic today might say it doesn't make dollars, so it doesn't make sense, that doesn't cut it. if I was to put on a fintech company's hat and walk into a conference where there's a lot of bankers, I would not be pitching my solution. I just say, look, if you're interested in payments, this could be the future of payments. And it's still maturing. Understand this is a potential outcome. This is what we're working on. This is what we're working towards. If it's universal passporting, if it's so you don't have to, refill out forms and KYC yourself, like speak in terms that bankers would understand, like, oh, you're talking KYC. I love that. But that at a cocktail party would start a discussion that I don't know is happening all the time because people get a little sideways. Then you can pull it back to like what's going on in payments today. Like, geez, there's a lot going on in payments. It's all around, what's the bank's future role in a payments ecosystem? How do you create urgency to create a strategy if you don't have one? All that is where I think a lot of tech companies are trying to start their conversation. But there might be that cheap hack of, let's talk about something that everyone is still trying to get their arms around after years of talking about it as if they know it, and use that as the entry point.
Well, I guess I would just ask beyond crypto. I would just love Pete and Kelly's views on what they see working well in fintech right now. Whether it's when you're talking to banks or when you're talking to, you mentioned talking with other partner organizations. Kelly, I know you guys have a lot of conversations out there in the market, a lot of partnerships. Both your companies have a lot of partnerships. I think, if I'm not mistaken, recently, I think, Kelly, you guys announced a recent funding round. And I know, Pete, I think you guys announced you had the acquisition of Payrails. So so there's, I think people talk about there being no funding out there for fintechs or whatever. And I think what I've been seeing is, just to kind of kick things off here, is that funding is maybe a little bit, I think was it Alexa Von Tobel said at Finovate, she said the money's still there, but just the cost of capital and the scrutiny is a little higher. But it seems to me like where there's a use case that's really solid, whether it's Payrails, Pete, or whether it's what you guys are doing at Allied, Kelly, it seems to me like money's finding its way to solid use cases. It just, if I'm kind of putting on my Al, to your point, right, if I'm putting on what's hustling right now, it seems like really good solid use cases are what's working, and it's getting the money. It's just where it's very speculative and dreamy, it just does not seem to play. But I would just love to hear your thoughts. And Kelly, I don't know if you want to go first, but just
Sure.
What do you see working out there in fintech land? What's working well?
Well, first of all, there's no shortage of money out there. I don't know where that's coming from, but coming off a fundraise recently, there's money everywhere. The question is, are we talking about a use case play, or are we talking about a platform play, a network play? And that's really where, today, if you take a look at Allied and you think about us as the bill pay company, bill pay is a use case. Bill pay has nothing to do with who we are other than it's a use case that we use to make money. The platform play comes into effect where we're leveraging our real-time integrations into many, bank clients, north of 500 now, in order to move money faster for whatever reason. And, that reason could be to buy crypto in real time, to trade crypto, buy, sell. It could be to pay a bill. It could be to pay a person. It could be, to pay an invoice that you've received. There are lots and lots of use cases you can layer on top of the set of rails. But I know for me, one of the most frustrating things in this industry has been waiting for the networks to do something. And, when I say do something, I mean, when we're talking about the clearinghouse and RTP and, we're talking about, FedNow, these things have been in pilot forever. And, the endpoints and the reach just isn't there. And so, there are use cases where it makes sense to connect up to them today, but they're not what they were cracked up to be. They were supposed to be much, much more extensive. And so the counter effect of that has been for me and the companies that I'm working with, well, guess we're on our own, folks. We're going to go build it. Yeah. And so that's what we're doing, is building out our own platforms that can move money in real time from endpoint to endpoint. And those endpoints at some point can extend as far out to as, loading your Starbucks card through your bank's website or, PayPal, Venmo, what have you. So the more we start thinking about the platform and how an endpoint to send money from or receive money to could be anything. Now we're really talking about a strategy that the banks can get behind through a single integration and be able to kind of get into all of those use cases that present them with the opportunities to craft their own who am I for who I serve.
So Kelli, as you're rebutting Sam, I'm just thinking that when he's talking about money and it being a little scarcer, I look at it as companies that are flawed aren't getting invested in, and that's not the way it was last year. Like last year, the narrative was don't worry about financing deficits; the cash will be there for you. Now that's no more. I think investors have started to become wise that there's a lot of lending businesses that kind of masqueraded as SaaS businesses for their valuations, and I think that's where there's been an awakening of sorts. And so then I think about the public markets. And again, I don't want Ron to think I was just teasing him when we were together. I was listening to him. I think he gave me something like 75 to 80% of public fintech stocks are down in valuation from last year. So what's changed for fintech founders from 2021 to 22 is, how do you preserve capital? Reduction in force, we're seeing it across the board. I think that's a major topic for us to discuss. Get leaner, get faster, pull back on your marketing spend. Getting to cash flow positive or at least break even seems to be something that I hear quietly discussed at pretty much every fintech, one-on-one that I have. So maybe maybe I'm just like trying to bail Sam out of his comment, but I do think that, these companies that in the past, could have been attractive to an investor just aren't going to get the same attention that they would have 9-12 months ago.
Well, so there's a couple of things that I experienced during the fundraise that would tell you a little bit more about, I guess, or explain a little bit more behind the comments. But you're right in that there was a lot of money invested last year and that there's not as much action this year. What I'm hearing from the investors, who, by the way, are all following up now, the ones that didn't invest are following up now, wanting a bite of the apple. So I know they're still there and they're still hunting. But what they're hunting for, is a broader play and a broader strategy. They don't necessarily want just this, one-trick pony kind of company. And I think that's the distinction, is that it depends on what you're up to, how interested they are. Profitability, I will tell you, they are pushing on profit. The investors are pushing on profitability. Everybody gets, kind of uncertain in market conditions such as these, right? And so we want to make the investment and not be, penny wise and pound foolish. But at the same time, we, need to ensure that our companies are on a path to self-sustainability. Right. And that's really what they want more than anything. But they will go into the red. And, my investors are saying that to me right now. You got something you want to invest in, tell us, we'll write another check. So that said, I think it is all about having the right story, the right, right product line or more than a product, to take to market right now.
Yeah, I think I was thinking about what something Brett King had pointed out to me, that he wasn't running into situations where people were pushing hard on, VCs were pushing hard on profitability as much as they were pushing on, kind of business model and tweaking your long-term value, and how you, as one other fintech founder we've had on the hustle before said to me one time privately, we have two sets of books. We have one set of books that doesn't sound very good, but it's sort of the name of it. There's two sets of books. There's the one set of books that's standard accounting and profitability, and then there's another set of books that says, this is kind of what we would need to do if we needed to press the panic button But we're not pressing the panic button, right? We're going for long-term value. We just have to do it. We have to build up the confidence levels with the investors that the model, whether it's a platform play or a use case or multi-use case play, that it's valid, that it has legs, right? And so that's it. It's a good pushback, Kelly. I like your point around a platform play, that there's sort of multiple points of entry and there's a little bit more flexibility in that too, right? You're not just sort of going after one trick and then trying to find another trick and a third and another module or whatever. You've got a little bit more of a vision to it.
Well, and you're building longevity, right? And just for the record, I have 3 sets of books. So I have I have the, hey, everything's going gangbusters, keep your foot on the gas. I have the, it's a normal day in the life of, and then I have the, oh shit.
Right.
The break glass immediately.
Yeah, but it's, and our investors actually taught us to do that here. And, one of the things that I really appreciate about that is just knowing how far away from the panic button I am at any point in time, right? And being able to manage based on that. I think it's important for a management team to understand that. So I'm actually glad to hear them say that, people say that they are doing that behind the scenes. I think it's a very healthy thing to do as a business, especially in an early stage company, keeping in mind that most don't make it. So you need to know when to cut your losses, and, I'm fortunate that we don't have to look down that path. But I was running a payments company in 2008 as well. And I'm telling you, there are times when things will change your path in a heartbeat. Time to
get the oh shit books out, right? Yeah.
Right.
I hear you on that. I guess one thing, and Pete, I would love, for you to jump in here, whether either any reactions to any of that, or just, what do you see working well or not working well out there? Anything, it sounds like funding is better off than maybe I thought it was, and or some of the things that I've been hearing right and left. But anything else come to mind to you as what's working well or not working well out there in fintech land?
Sure. But first, I might as well share my story. I feel like, at least the first 8 years or so, we only had that oh shit book out all the time. Like
that's when we met
day.
Pete, right?
Yeah. So eventually we got there. It took some time, and it did feel good when the sun came out a little later on in the company's growth, and you're able to come up for air a little bit. But that's part of the hustle, right, Sam? That's that's kind of what we're talking about. When a lot of these companies are feeling those challenges today. I think what I'm seeing is certainly the funding is there. Like you're saying, I do think, to your point, it's not just all, we'll figure it out later. Don't worry, we'll have another round of cash for you if things get tough. There's certainly more scrutiny. But for the right business, the right product, I think, there are eager investors looking to, make bets. I think what I'm seeing, what's working, what I think is exciting is, there's still a ton of innovation. And it's typically coming from fintech. If we look at the crypto space, a lot of that has come from DeFi. The innovation is just, it's moving at such a fast speed. And these are, in many cases, they end up becoming good things for our industry, for traditional financial services. A lot of the innovation, a lot of the innovative products are coming from bleeding fintechs that are coming from DeFi. And they're now being introduced into our traditional models, our existing stacks, opportunities to modernize. I think another thing we're seeing is, fintechs that kind of like early Gizio days started off direct to consumer, when it was, just get users and we'll figure out the business model later, have pivoted today into B2B2C. So, my role, I'm talking to more and more fintechs that started off as direct to consumer. They're saying, we need to start making money. And, here's a path to do that. So I think our community financial institutions are going to benefit greatly from a lot of the innovation that's happened in fintech with some of these startups that are making that pivot to offer their services white label or as, a service, platform, for whatever it is they're doing to our banks and credit unions. So, I think it's an exciting time in our space. The innovation is exciting, and I mean, there's regulatory challenges, that we're working through, which ultimately I think are going to, still favor, traditional financial service companies. But nonetheless, I think a lot of that talent, tech, and everything is coming back to, our community FIs, or and then ultimately their consumers and business customers are going to benefit from that.
Very interesting. Yes. I tend to agree with your optimism, and I also agree with you on the regulatory.
That's all I've got, Sam. Usually it is optimistic, maybe to a fault.
That's part of the too, right? It's kind of an unbrought. But I actually think there's always this. It's funny because regulatory always gets presented in many ways as sort of a negative view, but I almost look at it as a bit of a moat. Makes it more difficult in some ways. I mean, if you're a brand new startup, if you're coming into the U.S., for example, we see this every now and then. We'll talk with an industry provider that's coming into the U.S. and they'll say that they have a loan origination system, let's say, for example. And we'll say, well, will it work for a mortgage? And they'll say something like, well, yeah, as long as a mortgage works just like a consumer loan. It's like, well, that's just it. It doesn't. Like, that tells me that you don't know anything about this market, and that regulatory difference between a mortgage loan and consumer loan is a great example of it's a barrier, right? That's one of the reasons why, people that get really good at mortgage loans, there aren't that many of them. There's not a really long list, right? Because it's hard. And the regulatory thing is hard. So I almost view it as a bit of a positive for those of you, Kelly, and you talked about all the money you guys are moving on any given Tuesday. When you're moving around that amount of money in a regulatory environment like ours, you get really good at knowing certain types of things and having muscle memory of being around those things. And that's not easy to replicate. So it's almost like a bit of one hesitates to say a differentiator because there's hundreds of companies in our industry, but there's not hundreds of thousands. I mean, like it's still, I don't know, Kelly, any thoughts on that? But it's just like, I look at it as a bit of a plus for you guys.
Well, I mean, I've always said, if you just kind of look around where the fintech companies pop up and where the payments related ones pop up, what you're going to find is pockets of them. And you'll find these little hot spots around the country. And believe it or not, you got a hot spot sitting here in Elizabethtown, Kentucky, of all places. Why? Because it's a knowledge business. Payments is a knowledge business. And at the end of the day, it's a dangerous business, high risk business. And so people coming into this space who want to think about moving money, want to think about partnering with somebody, they don't want to think about doing it and everything you have to control around making that very high risk business, successful, protected, agreeable for the regulators, and so on and so forth. Now I'm gonna say something perhaps a little controversial here. I know, right? I'm on the right show. So, but look, here's the thing. When we founded iPay, for example, and built iPay, that the entity, the money mover that we were, was not an entity in the NACHA rule book. Like literally, we showed up at Council for Electronic Billing and Payment, meetings, and I just listened, and I'm like, I'm not that, I'm not that, I'm not that, I'm not that. And finally, I'm like, hey, question. Here's what I do. Where do I fit here? And they had no answer. There were no rules technically that bound us, in the beginning. And that's true, today around crypto, right? There aren't rules. And so regulators are struggling a little bit with that today. Less so on the credit union side. They're full steam ahead. The bank side is getting locked down a little bit as they try to figure it out. But the controversial statement is, if we don't innovate out ahead of the regulators, we don't actually think the regulators are going to do the innovation for us, right? We don't think that the rails are going to get laid before there's innovation to put on them. So at the end of the day, in order to really push the boundaries in this space, you have to be out ahead of the regulators. And we have to bring the regulators along. Otherwise, none of the things that we're doing today, all the way back to digital banking, multi-factor authentication, and the whole 9 yards, wouldn't exist today if somebody didn't get out ahead of it. And so that's part of why we continue to push the boundaries, is really to signal the regulators, here's where we think the industry needs to go in order for our community banks to be healthy. And we'll walk with you, right? But come on with us, take this journey, because we really do think this is important for the industry. And it takes some guts to get out there and lead them that way.
So Kelli, as you're saying, let me share some observations from talking to bank CEOs. So I know this is all around the fintech space, but in the last, I'd say 8 weeks, I've probably spent a lot of time, a lot more time than I care to acknowledge, with various community bank CEOs who, inevitably say their biggest wild card today is the regulatory environment. Yep. And it's interesting when, we started talking about crypto, and I know that wasn't the intent of today's hustle to go down the crypto lane, but I even think about regulation, as it might impact, the blockchain stuff that we were talking about. If you think about trillions of dollars potentially being reallocated off the blockchain, that means we need regulatory clarity. Right now, that's challenging because there's at least 6 federal regulators that have congressional committees at their disposal, and they're all trying to, parse out what's going on. That's where I think the regulatory wild card is not the moat that, Sam described it as. It's really the deterrent of saying, like, am I playing football, baseball, soccer, tennis? Like, where am I competing? Give me the opportunity to have a playing field that's level. Competition's healthy, but I don't want things to be moving every 2 years, every 4 years. That's not how you build a durable business model.
Yep. And it's tough. It's a tough thing, because you don't know what's actually going to be the thing that sticks. But I tend to agree with Pete. I think that, blockchain is, I think it's time. It's time to do something better. I mean, I personally worry about the age and fragility of the U.S. banking technology under the hood. And frankly, I think that the regulators should be worried about that and weigh that against, what it is we're taking a look at as a potential replacement or a better, more secure, easier to control, mechanism. And I think, we have to be real with ourselves about how ancient the technology under the hood is. And ancient technology in no industry is a good thing.
Yep.
Yeah. Well, and I just quick housekeeping note that Al mentioned earlier about asking questions, and I would encourage our live audience. I know for those of you on demand, sorry, you're going to have to ask us questions later, but you can get a hold of us. You know how to do that. But for those of you who are on our live audience right now, if you have any questions, don't hesitate to feel free to pop those in. Al and I will keep an eye on it, and we'll address them as we can. We've got about 11 minutes here left to keep the conversation rolling, and I guess one other thing I'm kind of noticing out there, just to kind of get your perspectives on it. I know we've talked a little bit about payments. We've talked about crypto, which is kind of the asset side, and although there are payments and lending certainly use cases as well, but it seems like there's a lot going on in lending tech. I'm picking up on a lot of people looking for tech to either drive loan volume, either marketing systems or loan origination systems that are being either acquired or supplemented. I think I was just noticing, what was it, yesterday, the announcement that MeridianLink had acquired Open Close, or was going to be acquiring Open Close. So that would be crossing or beefing up in terms of mortgage. So I'm certainly seeing just lots of movement on payments. I think, Kelly, to your point, there is a network effect there that I don't necessarily think we have to worry about on the lending side, where we can maybe make some moves a little bit more aggressive. We don't have to wait around for the network effect. The network effect helps us on the upside, right? But until we get that flywheel effect, sometimes it's a bit of a slowing thing. But I know if you guys are seeing any other patterns in whether it's Pete when you're at Money 2020, or Kelly in your travels, of other categories of fintech that you're seeing some interesting. I think another one I saw at Finovate was just the continued focus on the customer experience. What is it? Shadowing platforms and the AI bots and that kind of thing. But I don't know if there's any other area that's really popped out at you as being up and comer, or anything there, as we're waiting for any other questions to come in. Go ahead. And Kelly, I don't know any.
I've not been out on the road as much lately, and Pete has. I know we were exchanging some notes yesterday, and so Pete, why don't you take this one?
Right. Yeah. An area that I'm seeing more and more interest, and I think it was a little more prominent in Money 2020, is identity. KYC, AML, self-sovereign identity, identity on chain. How that gets back to the the NTT conversation I had way back. Open banking has made some great strides in getting controls back into the hands of the consumer. Giving controls to the consumer to know where their data is going, what data is being shared, and how interoperability between financial services, technology companies, and organizations. I think we're going to see the same thing from an identity perspective. Consumers having more control over their identity, what information is being shared. That kind of brings you back to loan origination a little bit. The amount of waste in onboarding a user every time they get a new product or need to update something. I mean, I think we could ask consumers what's one thing that they don't like doing when it comes to financial services, having to fill out all the same stuff over and over again, when it's like, don't they already have this information? Same in medical and healthcare, So that's a good point. Identity management isn't unique to financial services. Like, this is an issue for consumers, just day to day, in whether it's healthcare or government or, just e-commerce even. So I think financial services, there's a lot of room for improvement there. I think the challenge will be interoperability between identity management solutions. So it's going to be hard to have like a one thing for everything, which I kind of think, that's where some of the application for on-chain is, because if you have this ability to take it with you, or it can be compatible with other solutions, you have a platform now that service providers, whether it's a loan origination, account opening, a credit card, solutions business, if there is a standard for those services to build to, you'll see, great improvement in efficiencies, lower costs, better customer experience. It's an area to me that I think is ripe for some monumental change. So AI and some of the that's, I think it's there. It's I think customer service, AI chat analytics. That's kind of evergreen. That's always going to be improving. I don't know that it's this wave. Whereas I think what we saw with crypto and blockchain tech, what we saw with internet, what we saw with mobile, I think identity is going to be another big area for growth and improvement, and hopefully just better experiences all around for our customers and their users.
Yeah, Kelly, Kelly or Al, anything to add to that?
I just want to add to Pete's because I've heard from different investors about their interest in the fintech space, kind of moving away from the buy now, pay later, the AI, kind of stuff with the whiz bang capabilities, more towards the cyber insurance. They find that far more interesting for, I think, the reasons Pete just said. It's like Centrelink that, I think I said that right, identifies synthetic fraud.
Yep. Great product.
Sardine, which, started up around ACH movement between crypto. I think now like 2/3 of its clients are banks. I mean, like those are the places where as things move from analog to digital, investors are going to be paying more attention. And if investors are paying attention, they're going to have a business outcome or a case that's worth taking a peek at. And it goes back to the authentication, the identification, as being, hugely valuable. And it's a place that I think banks and tech companies can really naturally work together. It doesn't have to be competitive. And I think that's where investors see real upside for funding those types of business models.
Yeah, I think I would just kind of describe it this way. To me, when we talk AI, we talk machine learning, those are a means to an end. They're technologies that allow us to do things differently to create an experience. And so from my perspective, I don't focus so much on is it AI, is it ML? I focus on is the experience one that would be further improved by these technologies? Are they the right technologies to produce the optimal experience? And sometimes they are, sometimes they're not. Sometimes they are in the background to drive intelligence internally, to kind of drive us, in a direction so that we understand our users better and things like that, right? So I think, buzzwords are a funny thing, right? Some of them are an actual thing, and some of them are a, programming method or a, a technology. So I think it's important that, as an industry that we kind of separate those things, right? What is it we're trying to do? We don't AI just for the sake of AI. Right.
Well,
we need
absolutely.
a purpose.
Well, and listen, I know we just got a few minutes left. I know all of your time's valuable. I suspect you guys might be booked up right on at the end of the hour, and we want to be mindful of our guests online as well. I would just say, in closing, we'd just like to ask real quickly. I'll kick off. It's November 8th. We're heading into Thanksgiving season, and we'd just love to know into this season and on into 23 what you all are thankful for. And I'll kick off by saying, I heard all of you mention your children. Charlotte, my wife, and I, we have 3 boys, and one of them actually is a developer in fintech now. He's 23 years old now. They're writing code, and so I'm very thankful for our family. But I'm really, really thankful that I get to work every day with fun, smart, kick-ass people like you two, like you 3. Al, you get to be included in that too, because you're the ambassador of Quan. But I would love to know what our guests are thankful for going into this season. And Kelli, let's start with you.
Yeah, faith, family, friends, top of the list, right? Always for me. But, at the end of the day, I consider family my work family as well. And I have to tell you, this whole industry is family to me. And so I'm grateful for all the friendships along the way. Pete, I can remember, the first time I think we actually met in person was in the old iPay building here in E-Town. And when he was at GZO. And so, just all those, things that kind of make work less like work, more like just having a great time, doing great things, helping great people.
What about you, Pete?
Kelli gave us some great advice back in those days that helped us, on the right path for working with financial institutions. That's for sure. And I still wasn't sure if they were, part of Apple at that point. I'm like, I was just like, I mean, think about how far ahead they were in terms of payments on mobile devices, So
yeah,
hands down, I got to be thankful for health and family. Those are probably top of the list, for sure. That's such a big deal, and it creates the opportunities to enjoy all this other stuff that we get to do, and whether it's work and hobbies and life and adventure, having the health and the people to share that with is most important. So.
What about you, Al?
I think my fast thing is I love being around curious folks, people that want to continue to learn and share with one another. And so, I just think it's awesome, Sam, what you've been able to build here. Love what Cornerstone does. Love, how, companies, like Kelly's, like Pete's, continue to push a massively important industry forward. And they can do it in competitive ways, but it's also around collaboration and just, getting creative with one another. I think that's the best part of showing up every day for work.
All right, with that.
Can I ask one more question, Sam?
Really grateful for all you guys, and we'll see you again out there on the road and on the next hustle. Tip of my hat to you.